Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So first and foremost, Bitcoin going a little bit sideways here. People get bearish, thinking it's going to break down out of this support structure of the 42394 region on a daily time frame, but it may take a while. Bitcoin sometimes ranges, and we've been in this range now for 5 days, and if you look at this entire thing as a range, like this has happened before. We've been in here 5 days before dropping down, 5 days before dropping down. It takes a little bit of time to entice the liquidity in, and this is a 706 structure of this diagonal pitch fan we've had price in for over a year now. Respects these channels quite nicely. So are we going to drop down to the 6.5 and clear out the liquidity down below at 40k and 39? If you look at the CME chart, Bitcoin, we have a CME gap down here. That would make sense in this structure to come down to this and sweep it up, and you could possibly bounce off of that. We got a little bit of rejected off the point of control. The fact that we didn't even come up to it is interesting to note. So do we come up to this, come down first, or is there enough liquidity down below to just justify? We came back and recovered this gap here on the CME and possibly coming down to the lower one. Let's go into high block capital and take a look at the liquidity. What is high block? Well, people lock that liquidity into the charts to get burned to a crisp by the market maker for not using a stop loss. And we get to see where those crispy characters are, so let's do it now. We'll do it live. We'll do it live. Oh no, logged me out. Hold on 1 second. We may not be connected here. Give me 1 second here. There we go, we're back. This will be the last day we likely use high block, because there are free alternatives like this little bit of happiness here with coinglass.com, and you can go to the liquidation heat map. It's very similar, shows all of the liquidity down below, so no need to pay high block, even though it is a nice resource. Free is better than not free. So if we look here on the 1 minute time frame, you will see that there is a band of liquidity down here at 41.96. Do we come and sweep it up? We're forgetting a lot of the liquidity to father time here. So it used to be a short imbalance, now showing a long imbalance, but basically some longs being pooled down below here from that V-shaped. All right, let's go into the higher time frame and see where that liquidity lies, because the 1 minute is no longer remembering where the liquidity lies. Go to max liquidity here on the 7 day. And if we go to the 7 day, we're at a rock and a hard place. Some liquidity, a couple billion up above, a couple billion down below. The closest band of liquidity down at 42K. For the thickest one right there at 42 even. Got 2-3 billion down there on the 7 day. Going to the monthly. The monthly has that nice little band down below at that 39.5 region. You could do a little sweep mitigation wick down to that 38.5 region, and if it gets bought back up, you could have some nice divergence and possible holding of that play to the upside. Once again, this is down in this region. This needs to hold and have some sort of bounce above it. Even if it comes down below it, if it comes back above, you could still be on bullish territory. That is the last line of defense in my mind for a potential bounce that could take us up one last time. But overall, the pre-halving phases, we are due for a retrace into the pre-halving. This, you could read about it by Rect Capital on X. He does a far better job of explaining it, so I won't bother. So coming back to the monthly, the liquidity is to the downside on the monthly time frame. Going to the 3 month, you also see this thick band down in 35, suggesting that we eventually retrace back to there. Are the 50K pools up here safe, or are they going to get a rude awakening of a scam wick to knock them out before coming lower? Same thing on the 6 month time frame. You got that large pool down below. Would love to see lower prices, to be honest with you. Be nice to see this 25K hit. High prices are overrated. And we came to the top of the range from March and mitigated off of that. All right, so let's go into the charts and see what we can see. Once again, rejecting off this point of control, you got a few high volume nodes that you're reacting off of, some down here. Here's another one at that 42,175 on the CME. It also happens to be that 49,394. It depends on your chart, so you should be looking at multiple charts. This is the Coinbase chart. You have the CME chart, and then I look at the Binance for my main TA. Okay, so once again, the line in the sand, we were talking about this 236 level at 42,114. Do you stay above it? If not, you're slated to come down to this pool at that 40K and sweep up all of this long liquidity. They generated this liquidity over the course of 43 days, and you had some stabs at the liquidity to the tune of 11% here and 15% there. So there was a large pools of longs knocked out there. So the amount of billions of dollars that could have been taken here, if it holds this range, it could use that money they took off the table to then bounce up into these regions once again. So don't count it as written in stone to come down like this right now. We could be going up higher first before the deeper retrace. You catch me? So let's go ahead and look at the liquidity. Say what's up to everyone here. Yo, 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 what's up, Clue? I wish Coinblast offered lower time frames. Yeah, I agree on that. For sure. But free resources can't be denied. And it's nice that it does put, you have this also, this one. This is the lower time frame to me. This is the 1 minute, because you can see this has been a very interesting thing. If you notice, from the current price action, which has the most amount of millions nearest by, normally it will go in that direction. So this is kind of a different outlook, but it's the same concept, and it's multiple exchanges. So I believe you can look at it across multiple exchanges too. So it beats High Block in that regard, even though it's free. And then you got this exchange liquidation. Like right now it's saying it wants to go up because there's more liquidity up here on this Bitcoin exchange liquidation. So coming up to that 43,100 region, you can see there's more band of liquidity here than there is down here. See, it goes up to a billion, but over here you have a 1.2 billion. So even just coming up to this 700 million level at 43,474, this is quite nice. I like this one. I've been using that a lot recently. It's basically the same as the minute, just put horizontally instead of vertically. All right, so let's go into the momentum. Link in the description for more. MomentumMaster.info. We had another banger day on NQ. We put the accountability out there for everyone. We had about $3,600 profit, about 733 ticks captured. And yeah, we're just a hop, skip, and a jump away from another funded account on the 150K level, which has a punch to it, packs a punch. So let's see the features. Scroll down to features, toggle everything at your leisure. You have the trend cloud, the baselines, the stochastic array, and more dynamic alerts to your phone, so you don't have to stay plugged into somebody telling you what to do. Be your own guru. So let's go ahead and take a look. Alright, this is set up for the light version, which we use for scalping NASDAQ. It's the same thing basically, just focus on the baselines and stuff like that, the cloud. Okay, so the 4-hour cloud coming down to a position here, getting mighty low, coming down into the price action. Price action not really coming up to it, but it's still coming down. This is a sign of kind of weakness. You could be getting above it, yes, but it could meander around and then break down from the cloud because there was no strength shown. This did very much the same, but one thing you want to always trade with, I always say in the Discord, trade with the cloud. So here, when you started to have candles above the cloud, then you're slated to bang to the upside. Conversely, if you start to close candles beneath the cloud, even ever so slight, to the downside. If it doesn't have a committed follow through, then it's doing something else. You should be protecting yourself and your stop, put your stop loss in the profit at all times anyway. But either way, that is what we look for each and every day on the schematic here with the trend cloud. You get above the trend cloud, boom, to the upside. Get beneath it, bearish retest, boom, to the downside. Okay, so let's go ahead and look at the higher time frame here. We've been talking about the 3-day, which closes in a day's time. So does the 3-day succumb to this cross down event from December 15th and start to accelerate to the downside, similar to what happened here in May? Once again, in May, we had that in April, and it still took a good 24 days to actually play out. So it doesn't mean it's immediate. This is the 3-day cross down event. So even here, this could be, even longer. The ultimate time it took before it started to break down out of the range was about that 33 days or so before it started to break down, and even came back up and then broke down some more. So it's nothing goes up forever, nothing goes down forever. It's a steady journey back and forth. But the cross down tells you that a potential pause on the upside is inbound, and we've been talking about it since December 15th. Even though we stabbed up to here, that 48.2 was our target to possibly come lower. The confluence was pretty undeniable. And yeah, let's go ahead and take a look at the momentum. So the stochastic getting a little bit suppressed here by the Williams coming down lower on the 3-day. Williams, the #1 futures trader to date, inventing this Williams %R, which ICT oddly disparages indicators, yet idol worships Larry Williams. So we got some sort of strange thing with him going on where he hates on indicators but doesn't respect someone who made one of the best ones. Anyway, so let's go to the 22. I just really don't like idol worshipping people, and I don't like like people who kind of double speak, and ICT tends to do that a lot. And he regurgitates concepts but doesn't give credit to those people. So the 22-hour, you have this money flow disparity coming beneath the RSI. We talked about this possibly bouncing up. It did give you a little bit of a bounce. You're now, the money flow is at even Steven levels on the 22 without going higher. So this is expressing a fatigue of buyers not stepping up to the plate. One thing also on the 22 is you have this cloud starting to shift to the downside. We were talking about ultimately we're looking to position into a short. I would like to see one more squeeze to the shorts before coming down to here to knock out the majority first. I mean, we could just have a slow death and fade down to 39K too, but overall I would like to see one last squeeze to the upside for a better entry. All right, so the 12-hour time frame, you're getting the price action closing above the baselines. We talk about the baselines a lot. These baselines are your leading moving average formula, one of the few on the market. So does it hold this 12-hour baseline that it's recaptured here in the last 12 hours? We have the money flow coming back beneath the RSI again, suggesting a curveball pitch to the upside. The last time we got that on Tuesday, we did see that slight burst up from here. So this curveball could be coming once again. If you bring this over, we could be getting that curveball up to that pool we were talking about yesterday. We're forgetting a lot of it to Father Time now, but that's why we mark it off in our charts. It's up here at 44.054. We also had a pool up here at the 45K level, which is now lost to Father Time as well, that it could possibly cascade to. So the 12-hour giving us some signs of life to the upside. Let's go ahead and take a look at the 6-hour time frame. 6-hour time frame had some hidden bearish divergence here as you were making kind of equal highs here and higher highs on the money flow, and we started to come back down, getting the cross up of the Williams, possibly cascading the 6-hour time frame Williams. If you look at this rising sun event, are we going to see it cascade here? We do have that thick band of 50x down here at 42K that we have not swept up just yet. So the 6-hour and the 12-hour still have some subtle support ideas inbound. The one thing on the 4-hour, you are resetting some of the stochastic here, and the Williams is at even Steven levels. You're kind of getting a cup and handle on the Williams. I've noticed this play out before at the 50 level. You had a rising sun event. You're coming back holding the 50. Everything at 50 for the 4-hour. And the 4-hour cloud is mighty bearish as you're getting a lot of selling volume. The trend cloud is a volume weighted formula. So here we had a lot of selling volume, but we held the range and then we came back above the cloud and burst up. So this is what you would like to see. If you are going to see it go up, you would see it reclaim the cloud, come back to the cloud, and then it would go. And then right around here, you would see the cloud start to thin, and then you would capture it again with some closing candles above. Now this doesn't have to be in this exact zone, in this exact angle, but we're pretty on point with how it proceeds into the future a lot of times, and it could go like this. But you trade with the cloud, and as of this moment in time, you haven't recaptured it, so the idea of intentional possible sell-off to the downside could still be inbound here on the 4-hour. 4-hour time frame, even Steven levels for the stochastic. You're not at overbought or oversold. Everything in ambiguous points in time and space. Going to the hourly. Hourly time frame is overbought on the stochastic, and you are coming below the cloud here on the hourly, suggestive of getting a play to the downside in terms of a ABC down lower. So hourly time frame has yet to recapture the cloud here. This on Tuesday, when you recaptured, you had a little bit of a manipulation here, but basically closing the candle back up above the cloud and coming up a little bit. This has been a very wick-wacky range-bound motion. If you're not paying yourself quickly, it's very dangerous to commit to a position in this range, so be very careful. Even if we come down to this 42K sweep level down here, this wick, which we haven't come back to yet. If we come down and knock out those 50xers down here, this could still be a way to come back in, similar to this mitigation wick here from Tuesday. As of this moment in time, the hourly is looking pretty bearish with the cloud above like that, so, and getting overbought on the stochastic without really giving much upside action. This is the Asian session, so I would expect Asia to fade into London anyway. It's what Asia's good at. Asia often passes the ball to London. Rarely do they pump up. Here they pumped up a little bit, but basically gave it back before London, and then London sent it up. Watching how they interact between Asia, London, and New York, if that's your thing. That is a ICT Kill Zones Tradinator thing. ICT did not invent the sessions. I don't know why they name it after him. People are just crazy. But yeah, it's the sessions, basically, how the sessions interact. So yeah, if you're seeing the 15-minute here, we're still holding the cloud on the 15, so this is how the time frames interact. Everything is fractals within fractals. So you have the 4-hour possibly suppressing the price with the hourly suppression, and you have this 15-minute trying to give some hope. So you don't have alignment. When you have alignment of all the time frames, then you start getting these signals of the 4, 5, 6 time frames oversold. Previously, when we were back here, the higher probability thing when we were talking about here on Monday we talked about recovery of the wick and the double bottom, and then we came up here. That was a higher probability setup, and we are also getting 6s, if you recall. We'll go back here in time. It will show you on Momentum Master what was going on in terms of the oversold states everything was in. You were getting 5s and 6s, so the exhaustion was primed to go up here more likely than not. So as we come forward in time, you're getting only 4s and a lot of circles for the lower time frames, so it's kind of in an ambiguous place. They had their moment and it didn't happen. So now you're getting the potential to come lower to exhaust some longs. Ideally, I would like to see a setup for a short up in the top, but I don't think they're going to give it to us. It's probably going to fade and go lower here. This is Thursday midweek reversal, January 18th. We're going to pause on the analysis and go to the broader markets, look at Dixie and see how it's holding up. And in order to do that, we need to look at the forexfactory.com to see the news. So we have unemployment claims coming as pre-market news an hour before open in New York. That should be interesting. Red folder and orange folders. We also have retail sales for Germany and Canadian core retail sales on Friday as well. So we still have some red folders today and tomorrow to look forward to for some volatility. So watch out for that going into New York. Let's go ahead and go to the Dixie. So we came and recovered that entire gap. We were looking at this as a potential draw coming up to here. It came up to here. We were like, would it reject at this 50% level? It went right through it. And now it's coming back to respect the fair value gap recovery as a bearish order block idea. Do we start to draw it back down to here, or are we going to retest this as support? As the dollar gives this cross down event of the baselines, it's giving a 4-hour potential of downside, getting an alarm flash on the Williams. So we could be seeing some acceleration to the downside. That would give risk on assets like NQ and Bitcoin a little bit of reprieve. And we saw some buyback here. We took some of this bounce from that 618 at the absolute bottom, and we took the short in the pre-market too. Boom. We got 300 ticks to the downside on that. So Bitcoin and NASDAQ. NASDAQ has some earnings this today as well. We came back to that deviation level from here. Let's go ahead and pull this over here, update the volume profile. So we came back above another node here at that 16.8 region, kind of flipped it, so it looks like we're drawing up into these regions, coming back to the point of control. All right, so it's all about what the dollar's doing. Dollar is kind of retracing heavily back down to the respecting this level, key level of the resistance, and coming back down. Just broke the super trend on the hourly. So now we could be possibly coming lower. If we look at total market cap, the total market cap bleeding out here, one thing that would have had you at hello from away from our projection here would have been this shifting cloud here on the hourly, this hourly cloud telling you a story, a narrative, if you will. We came up, we could not close above the cloud, and boom, coming lower, possibly into this BPR, balanced price range gap here. This cloud did curve, and it curved and it inversed on you here. So this is now pointing to the downside for total. Overall, we were talking about the daily fatigue cloud here. I believe it was the daily, no, it was the 12-hour. And this is ultimately fractals within fractals. So you see here, this drop down, retest the cloud, we broke it, and are we coming lower? I don't know how these move. I definitely don't place them there, but they move, and I don't click them and they move like that. Sometimes TradingView doesn't remember your exact location, it seems. All right, so possibly on this higher time frame, this nuke that placed perfectly with Momentum Master played out on that 12-hour time frame. Do we see some sort of reaction at 1.62? Are we going to get this manipulation squeeze to the shorts one last time before coming down to here, or will it just be an easy bleed down to the bottom? Total 3 also fatiguing here, not getting above that cloud. The cloud also not curving, it's slowly curving and remaining curved to this downside path. So that means the alts are having a little bit of a trouble here. Sui is the only one having some sort of life about it. And if we go to Bitcoin dominance holding in this sub range here, right around this candle over here, did not even make it to the bottom of the candle, just basically the wick over here from this October 16th level. That's a 6-6 retrace idea. Some people use the 6-5, 6-6, so that's why we have it as a pocket as well. So we're still in this pocket right now for the dominance. possibly going up. The USDT dominance being bullish right now, doing a shallow retrace to the 382, did not even make it to the cloud. We were talking about possibly coming to kiss the cloud, but then eventually wanting to go up to draw into the downside path. This means inverse to Bitcoin. We're looking at this inversely. When USDT dominance goes up, it kicks people into USDT, meaning longs get wrecked. We had the rocket ship down here, and we were looking at that potential when we had the conviction above the cloud. How deep of a retrace were we going to get? We wanted to see it come down a little bit further before doing that, but we had the shallow retrace up, and it only came to that 382. Something we were also noting was holding this adaptive on the 12-hour. This adaptive moving average is, think of it as a VWAP, except more stable and sensitive at the same time. It is a sensitive yet stable formula. That's why I like it. Think of it as a second line of defense or hurdle to overcome, and we have overcome it on the 12-hour time frame. So that is something we've rejected off of, and now we've kind of reclaimed, giving the idea of some narrative shift to the downside for the markets, potentially speaking. Okay, so if we go to the daily time frame, you're also above that daily cloud. It happens to be at that 382, so that's one reason why it's doing only the shallow retrace right now. And do we start to see an acceleration to reclaim this bearish trend-based fib level that we've been respecting since October? Interesting. And this would be your market structure shift, or whatever they call it on these highfalutin support and resistance terms. You could just call it super trend, break the super trend or not. We're currently in a bearish trend. Do we break it on the daily? You'd need to come up to 4.9% on the USDT dominance to do so. There is a gap of draw potential up here to grab it. We also have on the daily time frame some zones down here. Let's go ahead and bring it all back to Bitcoin. Okay, we'll go to the CME. So the CME idea here, we're back at a point of control for this range. Do we maintain this point of control and head up back in to squeeze the shorts, or slowly bleed out and head down into these pools below? That is the question. If I had to commit to one right now, I would say we're holding the 236, and we will be surprised and do something, because everyone is kind of thinking 38 or 39K is written in stone. So possibly right now we're looking to see this come back up above the 4-hour and take out that pool at 44 at the bare minimum. We'll see. We'll just put it on to there. Not going to commit more than that. You got unemployment claims and red folders tonight pre-market. Might see that hold. Whoa, what's going on there? Why is it doing that? That's weird. Reload? Okay, sorry about that. So if you come to the hourly time frame, we were at the hourly. Thank you very much. So while we are bearish on this cloud right now on the hourly, we could overcome that on the 15 and this cross up event of the hourly here. If we come back above that cloud on the 4-hour, which is this yellow line, then we could reclaim the cloud and start to make our way up into that 44K liquidity range. let's go ahead. You got the cloud on the 4-hour here as well. This is something you'd have to flip on the 4-hour for in the next 2 hours and 33 minutes. If you don't get a candle coming up above here, you're likely going to come down in this C wave fashion down to this VPR on the 4-hour. If you get some Asia push, then you could be seeing some upside potential. This range bound motion is what we call the idiot box, because you'd have to be an idiot to want to enter into this with no clear direction. So you'd want to see the breakout and the retest, some conviction similar to Bitcoin before it wants to come forward. So you'd have to reclaim this cloud on the hourly, which it currently is not doing. The Bitcoin dominance is starting to rise here, and you're coming back above the dominance here. So Bitcoin people starting to lose their faith in the alt trading and turning their eyes towards Bitcoin as the Bitcoin dominance rises. You are in this range bound structure, cloud coming down in the 4-hour fashion. Do you get this upside path as well? Does the dominance take over for Bitcoin and take it to the upside? We'll have to pay close attention. This 3.3% away at this pool up here at 44K. There is that 44K pool. We're forgetting it to Father Time here, but there's the last vestige of that pool. 143 million. There was some more over here. $315 million character over here that was lost to Father Time. Do we come up to this short pool and scare the shorts one last time, even if it only gets to here? Let's find out tonight. Do you have anything you'd like to see? Scalping Sui now. Let's go ahead and take a look at Sui for my man Cluve. Sui, USDT. So Sui coming to the cloud, getting a slight bounce off the 4-hour cloud, but not very much, coming immediately back to it and showing some signs of rejection here on the range high for this region at $1.33. Looking like a shoulder head and a shoulder to the downside. We'll see if it comes to that 7.3 to that super trend down below at 118. Just immediately at a glance what I'm seeing. If we go to the higher time frame for the daily, you see this baseline failing on that push to the upside over the last 1, 2, 3, 4, 5, 6, 7 days, a week of upside. Getting a little bit of a retrace would not be obscene to think. If you take this initial impulse back here from December 18th, and let's just take it to the tippy top here and then down to that retrace there. You held that 236 at 77 cents for the next 1, 2, 3, 4, 5, 6, 7, 8 days, and then banged up all the way to the deviation level of the 2. And now you're coming back down to the 1382 and rejecting off the 1618 of this bullish trend-based fib level, Fiborino. And this is how the math does its math-like things. The math doing the math. So there's the 3 pillars of liquidity, or 3 pillars of trading: liquidity, math, and momentum. So this is how we do the math first to project into the future. So if we were seeing this in the moment back here, let's say at, on January 3rd, we would have been able to trap Sui into this channel, seeing that the 236 was holding, and possibly have caught this in advance. All right, so, and that's how it projects into the future, where it wants to go based off of the impulse retrace idea. Whatever players pushed it up and took their profit here, if it holds this region, they slowly insert their position and then assert their aggression forthright. All right, so let's go to the opposite end of the spectrum on Sui. Here you have a little bit of a bearish trend-based fib level, came down to here and retraced up to here on a 12-hour time frame. And so your $1.26 range here is something that needs to be respected in order to see more upside. This 1618 needs to hold basically, and if it does not, you're coming down into these regions. So as it looks right now in the immediate, looks like we're possibly coming down to this 786 at $1.13. You also have this cross down event of the baselines here. As Bitcoin dominance wants to go up, the alts are going to get paralyzed no matter which direction Bitcoin goes. We already watched about how you do that. The Bitcoin dominance is something you need to look at if you're ever going to trade alts. So if the dominance is increasing, then the alts will have some trouble. So looking at this to possibly retrace and cascade to the downside might be the thing to think about as it comes down into this $1.13 region. If you get the full distance of the move, $1.07. And this at least gives you take profit regions if you're in a short, looking at it potentially breaking down to the downside. 19.5% away to the 12-hour cloud here. Do you make it to kiss the cloud? The last time you broke out from the cloud was January 11th, so coming back to at least say what's up is not obscene to think. You got that 12-hour cross down event insinuating so. You had some nukes and a stop loss hunt, and now you're respecting this cross down event of the 6-hour, very similar to the Bitcoin 3-day potential, and coming down to that cloud at 10% away on the 6-hour. The frugal play would be to that 786 at $1.13. Do you see this acceleration to the downside? 6-hour time frame also getting suppressed potentially by the Williams and the higher time frames, and you see this 4-hour getting nicely set up. But like I said, when I first glanced, I was seeing it fade off this cloud. It wasn't giving it strength off this cloud kiss, it was showing weakness. And so that is why I'm saying it's coming down to here for sweet. Swig taking a C to the downside, perhaps. Alright? Yeah, no problem. No problemo. So let's go back to BTC, wrap it up in a nutshell. BTC getting a little bit of a rejection here in the immediate. Let's go back to that 5 minutes. You're getting some accelerated selling volume here. Let's go ahead and throw on the liquidation levels indicator. This is another free tool I've been using for years by ML Application. Liquidation levels version 2. Set your thresholds at 0.1 for every 100K trader. You can see there's more 100x interest down in this region, so they're going for that liquidity grab to them. Tisk to those 100x people. There are some 100x shorts up here at top, but they took the top rope and they're in profit, and these guys bottom long, they're trying to long and being punished right now, so they could be coming to these guys here in the Asian range. And yeah, looks like they'll go sweep up these 100xers. And so even without high block, you can view these things for free, and you can see the position size too, which is great. You can see a 570k 580k player at 100x. Yeah, they want that money. Why are you gonna put 100x on the trade like that? And so it predicts the levels for the liquidation points, and you can see where it sweeps it up and coming down to this region. All right, so we'll see how this reacts off of the 100xers, and do we go higher and break into the 50x and 100x shorts thereafter. If you go sweep up the 100x and hold that, then they just knock them out to not have to pay them on the real move. You go down to go up, and you go up to go down. So watching to see what this will do in the 100x range. And this is the Asian session. Hong Kong is very good at fading it into London. So do they fade into London and London brings it up? We'll just put it out in the future like that, like 130-ish. but ideally seeing the 4-hour candle close strong is what we need to take note of. The last thing is the 4-hour cloud and the 4-hour candle. How does this 4-hour react to this cloud? Cloud coming down and mighty thick, not really bullish by the fact that it came down to price rather than price going up to it and didn't even stab it yet. But I'd expect at least one stab more before fading. Maybe that was it right there yesterday, but we'll see. And that's my story, and I'm sticking to it, folks. So thank you for coming on into the live and sharing your essence with me in this eternal moment, of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the action.